Let's turn now to the UK, where Juliana Olayinka is standing by to bring us this morning's business updates. Good morning, Juliana. So for small firms to get access to 100% taxpayer-backed loans after the raised concerns about slow access to existing coronavirus rescue schemes, what modalities would this new scheme take?
Oh, well, there are several things with this new scheme. It's called the Bounce Back Loan Scheme. It will be available from Monday, the 4th of May, which is next Monday. And what this scheme will do, it's offering Britain's smallest businesses up to 25% of your turnover to the value of £50,000. And you'll be able to access this money within 24 hours, taking away all the bureaucracy and red tape that has really kind of dogged the other coronavirus loan schemes that we've had available. I think this is Chancellor Rishi Sunak's last chance really to show that this government is really working for everybody. Some people say that the scheme is too little too late, that since March the 23rd, so over a month since the Prime Minister Boris Johnson asked for businesses to close their doors, many of them have gone under. The coronavirus interruption loan scheme, which was that big scheme that the government asked businesses to apply for, hasn't really worked. Over 32,000 businesses have applied. I think only 16,000 have been successful, but this is 100% backed by the government, so the taxpayer will be paying the interest for these loans for the first year. And again, as I said, you know, this is going to be in people's bank accounts, so they say within 24 hours of applying. And so it's still seen as a success for people that have still managed to stay afloat over these past couple of weeks. But for some analysts, this is quite a concern, considering that we do have issues with fraudulent activity in this country, and some say it's too little too late.
HSBC is one of the companies taking a hit from the COVID-19, as the lender says its first quarter profits have almost halved due to the pandemic. What more can you tell us about HSBC's earnings?
Well, yeah, HSBC have given their updates today. HSBC is Europe's biggest bank. It's headquartered in London, but 4/5 of its profitability come from Asia, Hong Kong in particular. They've given their results for Q1, and their trading profits are down 48% from what it was this time last year. Their profits are about £3.4 billion. Also as well, their return on tangibility, which is a key indicator of their profits, are also down to 4.2% from 10.6% the last period. Now, a lot of people are watching this because HSBC is one of the biggest banks, and the fact that they get most of their profits from Asia, which is where this pandemic first started, is a key indicator of how other banks will stay afloat. What HSBC have done as well is they've set aside about £3 billion, dollars rather, to cover bad loans. Now, of course, many businesses are going to go under during this COVID pandemic. Many of them won't survive, and so any loans that HSBC were expecting to get back from them, they've killed that now, and they've increased the loan damage by 432%. So this time last year, bad loan coverage was only about $500 million. And the fact that they've increased it to $3 billion just shows how devastating the COVID-19 consequences could be to the banking sector. And now a lot of people are focusing on this period, but what HSBC have tried to do with their update is focus on what's going to happen over the next couple of months and how the banking and the global economy are going to try and revive. So that's what they've done. Their shares this morning at early trade were down about 1.4%. So not as bad as it could have been, but certainly setting the tone for what we may see from other banks in the next couple of weeks.
Just before you go, Juliana, tell us, what is the day looking like for the markets? Are we likely to see more companies report today?
We are. We've just seen the results coming from BP. Their shares shed 2% this morning. They've recorded historic lows. They've lost profit of about $4.36 billion in the first period. Now, of course, this has got a lot to do with the fact that there's such a decreasing demand for oil at the moment, and COVID-19 is affecting everybody. Their shares are down. EasyJet as well, the budget airline, their shares are down 1.7%. They've been up and down over the past couple of weeks, but this morning they've shed a few. That's because the majority shareholder, their owner, is having a spat with the other shareholders about buying some new airlines. The FTSE actually opened higher this morning by a couple of points, surprisingly, considering it's having the drag down by HSBC and BP. Oil as well, back in the spotlight. A barrel of Brent crude, and I know you guys have been talking about that, is down by about 3.2%. Now, we are expecting some figures from the UK in the retail sector for April. Now, we know that this is going to be pretty dire and grim, considering the UK high street, again, has already been suffering over the past couple of years. And in April, every single shop was shut. Even some of the big stores that rely on online delivery, they also shut down their factories. So this is going to give us a really good indicator of what the whole economy is going to look like, and whether or not there has been any online consumer confidence in these unprecedented times, Bissy.
Many thanks, Juliana. We'll see you at 1:30.